Hello, good morning, good afternoon, good evening, whatever. Well, today we are going to be starting with the first chapter of F3. I'm going to be using the LSBF notes that are currently available with me. They're the latest notes. As you can see, it's June 17 notes. They're very much relevant for our current sitting or exams, whatever you're going to be doing this time. And if you do not have the notes, please don't hesitate to contact me and I can provide you the link to these download notes. All the copyright goes to LSBF. We've prepared this. I'm just using this as an illustration to describe my lectures and just my understanding of the topic. So all the work has been done by LSBF and no rights are reserved to me. Okay. So these are some certain topics, chapters that we are going to be going through, and there are 19 chapters. So we are going to, it's safe to say that I'll be, recording 19 chapters, 19 lectures on these chapters, one for each. There might be a few more that probably depends on the questions that we're going to be doing and stuff like that. So it's going to be easy in terms of covering. It might be a little bit tricky when it comes to consolidations or rank reconciliations, but trust me, when we go through this, it will be fun. Moving on, I don't think I'm going to go through this. So today we are going to be talking about Introduction to Financial Accounting. That's the first chapter that we'll be looking at today. There are a few things that we're going to cover. So let's dig right in and talk about financial accounting. I'm sorry about that. My computer is crazy. Okay, that's too much. All right, so here we are. What is financial accounting? Financial accounting is basically recording and presenting. They're broken down into two different things. That's recording some day books, some ledgers, or whatever the business is doing on a regular basis, on a daily basis. You buy something, you sell something, whatever you do, that is recording, right? Do you understand?
Yes.
And then we have presenting. Presenting those day books or ledgers. Everyone can do ledgers, and I don't think at the end of the day you're going to show me ledgers all the time, can you? It will be tricky. You'll show me ledgers of, I don't know, sales, purchases, and tons of different things. It will be chaos. Instead, we came up with the idea of presenting the financial statements, 4 of them, called profit and loss, financial position, changes in equity, and cash flow. Most important of them are, of course, the first 2. All right. So I hope that covers up accounting. What exactly is financial accounting? And then we'll be talking about the types of businesses, work that we're going to be doing, what type of businesses there are, what choice do you have. Number 1 is sole trader. A sole trader is sole is an English word meaning alone. So sole means there's only one person who's doing the business. Simple as that. There's nothing you have to worry about. You're the boss of yourself and you're doing some business. So whenever you go to a grocery store and small shops, wherever you go to, you'll see those people are called sole traders. They don't have any limited liability companies. They don't have to worry about those things, right? The sole trader and the business are the same entity. So those people are same people. There's no such thing as a different entity. Instead, in the limited liability company, when we move to that, we'll be covering the fact that a limited liability company is considered a separate legal entity. It's like there's another human, but instead it's not a human, it's a company. Therefore, when we are talking about sole trader, it means that that particular person is himself the owner of the business, and the business is himself. Why do we say these things? Why do we say they're legally the same entity? Is because when in a sole tradership, if you fail to pay your suppliers, the suppliers can come back to your assets. They can grab onto your things. You're personally liable for all the business debts. You can't say that, hey, you know what, I don't have any money. Go to hell. No, it's not going to work that way, dude. You have to pay the money. Talking about partnership. Partnership is pretty much same as sole trader, but there are more than one person. There are maybe 2, maybe 4, maybe 10. So that's why they're called partners. Why do we call, there are a lot of audit firms. Why do the main person over there is called an audit partner? Because that person, because they're in a partnership. They're in a limited liability partnership. They're not in a limited liability company. The firms are not companies, they're partnerships. A limited liability partnership that we'll be covering later. Now, a partnership is run by the partner or an appointed manager. Let's say I and my brother starts having a partnership. Now, we are not very much into the partnership. What we do exactly is that we hire someone else to do the business on our behalf, and all we do is sit there, count the money, and take it back home and give some salary to the person who's appointed as the manager. Simple. Now that can work too, but in a sole tradership, normally that doesn't work because the business is too small. But partnership is slightly bigger and slightly more, I don't know, nicer. I don't even know if that's the correct word over here, but just deal with it. The businesses they are exactly the same entity, not for the the limited liability partnership, but this normal partnership, the business and the partners are the same thing, just like sole traders. And if there's a loss or if there's some business debt that you have to pay, both the partners cut the shares into their respective ownership. Let's say partner A invested 60%, he gets 60% of the profits, he is supposed to get 60% of the loss as well, right? Exactly. So what's the difference between partnership and sole trader? Actually, there isn't anything different. It's just that in a sole trader, you're just alone. In partnership, there are more than one person, right? If in a sole tradership, you're screwed alone. In a partnership, you can sink the whole ship. If you're going down, why not take some people with you as well? You can sit together in the park alone crying. That can work. So, whenever you want to screw yourself up, don't do it alone. Get some of your friends to do that as well for you. Moving on to something that's one of my favorites as well. A lot of people's favorites. And this helped a lot in a lot of different perspectives, in a lot of different things. It's called a limited liability company. It's owned by the shareholders. It's run by the directors. Now, directors could be shareholders, but the shareholders can't be directors. Is it true? No, it's not. It's the same thing. It can be both. There can be lots and lots of directors. There can be lots and lots of shareholders. There can be millions of shareholders. Go to Apple's website, look at their financial statements. They have millions of shares, right? They are all. Do you think only one or two people hold those shares? No, there are thousands of people holding those shares. How many directors can you have? Later, when you go to P1, in fact, P1 is not going to be there anymore, but whenever you go to any advanced paper, you will know that you're only allowed a very small amount of directors. You can only have a minimum amount of directors. But shareholders, they can be a lot. But directors are the people who run the business. Shareholders have no right to interfere in any work at all. Directors are the people who run the business. It's considered a separate legal entity. Now, a separate legal entity is not just something to say that, oh, it's a separate company. Where is it? Bring it to me. I want the company to sign. No. The company's directors are going to sign on their behalf. A limited liability company is really a very important thing to think about. Because if the company goes bankrupt, the people won't come after shareholders or directors or literally anyone related to the company. The Enron case, read the Enron case study of 2000 and 2001. And that was the reason the Americans came up with the SOX Act 2001, that's called Sarbanes-Oxley Act, that you'll be studying later in the future, but just a heads up, if you're interested in reading about some of the cool laws and stuff, that's one thing you want to read, right? So these are the three things: sole trader, partnership, and limited liability. I don't think I could have explained it anything more than this. If you have any further questions, please do not hesitate to ask me. Moving on to the next page, we have advantages and disadvantages of incorporation. Now, everyone says, hey, we make a company, we don't have to be liable for things. It's awesome. Everybody wins. If we make a loss, the investors goes down, right? The directors run the company. They don't really care if the company goes down because their money is not invested in that. The shareholders are the ones who are going to get killed because of all this. So what do you do exactly? Why? Why do we even have that company? It's too risky. Why do people even put their money in a company even though they know the directors could screw it up? Well, there are certain advantages. The shareholders are officers of a limited liability company, so there is actually no risk to them. They just invest the money and they wait for the profits. They don't have to work on that. It's easy money if you know what you're doing. You can't just go to, I don't know, PIA and start investing in PIA. It's Pakistan International Airways, by the way. Because the company is going down. It's screwing up. You can't do that. Or you, I don't know, you want to be a shareholder of Bitcoin. Nowadays, that's on the hype. Do you want to do that? No, I don't think so. Why? It's gone up. It's gone up to 4,000 as compared to what it was 1,000 something a year ago. Is it safe to invest? I don't think so. The market is too fragile at the moment. So, but that's one advantage. You don't have to work for it. It's just there. You just earn some money. It's not your personal assets are not in trouble. In contrast, the owners are unincorporated. There's no entity risk. There's nothing to worry about. You just invest. It's just a casual investment. You earn some small money from it. Simple. But hey, wherever there are advantages, there will be disadvantages. I don't know, you have to file for public record of all the accounts. Now, all the bigger companies, they're supposed to have what? A financial statement. That's where we come into play. Now, let's say there were no incorporation of companies. What would happen? We would be out of work. We won't have any work to do. So thank the people who take the risk of making a company. We are employed because of them. Thank you, people. Thanks a lot. Cheers. And there could be financial penalties for late accounts. Now, there are some penalties as well. If you don't submit the accounts on time, 6 months after the accounting period, that's the normal time. What happens? You pay penalties. That's where the government comes in. Hey, we get some money as well. You rich people, we are Robin Hood. We take money from you. And we don't give it to the poor. So we're not Robin Hood anyway. Moving on. And of course, a limited liability company are subject to corporation tax and tax returns and stuff like that. So it's all about tax. You'll be studying that in F6, so I'm not gonna brush on that matter. So okay, it's empty, but I can tell you about it a little bit about this before we move on. It's nothing very actually this thing over here, it's not very useful for the exam. It's just for your understanding of what financial accounting or management accounting really is. So there are differences. A few differences. Frequency. When do you need to prepare management accounts? It depends. You can do a weekly accounts. You can do monthly accounts. You can do quarterly. You can do, I don't know, annual accounts. It doesn't matter. There's no law abiding it. But financial accounts, when do you need to do it? Once a year. That's it. No questions asked. You need to do it once a year. Is there any legal requirement? Management accounts, do we have any legal requirements for management accounts? No, we don't. Financial accounts? Yeah, in certain countries, it's a law to file accounts every year. Countries such as America, in the United States, you're about to show your accounts every year, no matter how small of a company you are. And you need to audit that as well. Man, it sucks to be living in America, doesn't it? So don't live in America. Let's move to England. Format. Do we have any formats for management accounts? No, we don't. Why? Because the management accountants are lazy people. They don't care. They just do something on the paper to look cool. But wait, who are the cool people? We are the cool people. We are the financial accountants. We have a format. We have our idea of how we're going to go through things. Do we have a format for financial position? A statement of financial position? Yes, we do. Who are the users of financial management accounts? Who are these people? Management accounts are the management people in the company. They'll be talking about it. That's it. Nobody else. Financial accounts. Who are the people who are going to use these? Shareholders, stakeholders, and tons of other people. A normal public. I don't really care about Apple. Do you think Apple really pays me something? No, it doesn't. I download their financial statements and I read it. Why? Why do I do that? Because it's fun. You have the information with you, you read it. Oh, I don't know what's going to be happening in iOS 11. It's coming next week. That sounds like fun. So yeah, here's a few differences of what are the differences in management accounts and financial accounts. Nothing very awesome, but you get the idea. And there are certain questions over here. Okay, you can pause the tape and you can, I'm sorry, it's not a tape, it's you can pause the lecture and you can see these sample questions that I will leave to you guys to do. And when we come to the next chapter to discuss about it, I'll give you the answers. Simple as that, and I suppose here we are done, and next week we'll be talking about financial statements, yeah, that's about it. So a small chapter, a very nice topic. It was fun, and thank you very much for listening. If you have any further questions, please do not hesitate to contact me on my email that I'll drop by in the comment section below. Thank you very much, and I hope you guys have a great day.